Hello, welcome, and thank you for joining us for our advisor panel discussion. I'm delighted to welcome our panelists, titans of the advisor community. They are Lucy Barrett, Managing Director of Vantage Finance, Jane Simpson, Managing Director of TBMC, and Liz Syms, CEO of Connect for Intermediaries. Thanks all for taking part in our panel. Let's jump straight in with our first question. Here goes. Specialist lending has for some time been described as becoming the new normal. In 2020, which sectors of the market did you see grow, and where are the areas of opportunity in 2021? I'd like to put that question first to Lucy, please.
So for us personally, it was buy-to-let. We had huge volumes of buy-to-let, which was pretty consistent all year, notwithstanding the lockdown period, where obviously you could have lots of conversations, but in that sort of March 23rd through to May, you couldn't actually get anything done. So although the demand was very much there, it was difficult to translate that through to applications. I would say, if I'm being completely honest, every other product, because of the period of inactivity, I don't think we could say there was massive growth in any of them. I think we did very well as a business across all areas to not lose too much traction. But when the markets closed down for 6-8 weeks or whatever it was, I'm not too sure that growth was something that was seen across any of those specialist sectors. The market's been very busy since Q4 last year. You can't deny that there was a period of total inactivity, but for us, buy-to-let held up really, really well. All of the other products, we did see a drop off, but buy-to-let remained very consistent.
Jane, obviously, buy-to-let's a biggie for you, but any particular subsectors?
Purchases, obviously, with the stamp duty incentive. So we've seen a big increase in purchases that are coming through. Also holiday lets, and I think that's been driven by everyone having their staycations last year, and landlords have thought this potentially might go on. Who knows how long we'll be locked down for. And I think further to that, people are enjoying their holidays. So landlords are kind of taking advantage of that. A lot more holiday let inquiries coming through. Limited companies as well. We're continuing, obviously, the taxes that all phased in this year. That's the final phase-in stage has come through. So landlords are now looking at maybe switching some properties to limited companies or setting up limited companies for new purchases to make their tax bills a little bit better. So those are probably the three main areas we've seen coming through really strongly.
And same question to you, please, Liz.
I think, echoing both what Lucy and Jane have said, but I mean, for us, it was like, getting through 2020 for a lot of advisors was the thing to do, and actually having lenders in the market that we could use and being there was the most important thing, because we still had, a lot of demand. We are the same in that we've got and still have a lot of purchase business compared to remortgaging with the stamp duty incentive. I mean, there have been some kind of challenges with some of the products. Jane mentioned holiday lets, but of course, that was one of the areas that was sort of building up quite nicely. And then with the lockdowns, that's one of the areas that's been affected the most. Because, knowing I have a couple of holiday lets myself, and, we sort of, all the bookings got cancelled and then they got rebooked again and then they got cancelled again. And obviously that's going to give lenders cause for concern. So these were the sorts of challenges, not the demand from clients, but perhaps some of the limitations on product. And I think, in the residential area of the specialist market and the self-employed side of things is a challenge as well. So in terms of what types of business we did, like Lucy, a bit of everything, got lots of inquiries, lots of business coming through, and it's just keeping our fingers crossed that the lending products stay there to support that demand from the clients, basically.
Are there now enough providers in the specialist space in your view? Are there sufficient solutions there for customers? And if not, which sectors need to evolve, and what product innovation would you like to see this year? And that question first to Liz, please.
I think one of the biggest product areas we saw a demand for was the higher loan to value in the residential space. You know, the 90% was hit quite a lot, with very few lenders staying in the marketplace, and the lenders that did stay in the marketplace were the mainstream lenders. So I think I see for myself, you know, a large demand at sort of 90% loan to value, but not many specialist lenders in the marketplace at 90%. They tended to cap off at 80 and now pushing back up to the 85% mark. So I think that's a really key area that I'd like to see the specialist lenders develop into. And I think the other area, again, you know, touching on what I said just a minute ago in terms of the self-employed, there's a lot of hesitancy around the self-employed. We've seen high street lenders like Santander reduce what they will do for self-employed applicants and so on. And therefore, you know, we need the specialist lenders to really step in and fill that gap for the self-employed for what our market is looking like going forward.
Thank you. And Jane, what's your take on that?
I think there are probably enough lenders. There's lots of lenders, but there's always room for some criteria changes. Looking at the way that the markets are evolving and moving with that. I think for me, over this next year, something that buy-to-let lenders need to look at is their outlook on housing benefit. We are going to see a lot of tenants that have either been made redundant or potentially, you know, their businesses have gone under. And they may now rely on housing benefit to pay towards their rent. And I think the landlords, they're not going to want to be faced with being in breach of their mortgage conditions or evicting a really good tenant. So I think that at least in the interim, lenders need to look at that area and see if we can help our landlords to get through this time period.
Interesting. Thank you. And Lucy?
I think generally across the market, we're reasonably well served at the moment. There was a period of last year whereby lots of criteria got reined in, loan to values got capped across the specialist products, bridging, development, that all came off a bit. But towards the middle to back end of the year, it was very much business as usual. So I think product wise, it's not too bad. The only area where I'd say has really taken a hit, which you can understand, is the commercial space, because obviously lenders are just so nervous about the longevity of income and the ability to fill commercial space if it becomes vacant, tenant failure and things like that, especially retail, which was suffering anyway. So I think to have some more lenders that will take a more pragmatic view and look at things case by case would be great. We do have some brilliant lenders, but pricing in that commercial space now, it's pretty steep because a lot of the high street banks have retrenched either entirely or their criteria is so restrictive that loan to values come out at, you know, sub 50%, or they won't take certain bits of income. So I think I'd like to see a bit more of a return to the commercial space over the course of the next year, but I do appreciate that that will be a very cautious return because there is obviously still risk of tenant failure with what's going on in the wider economy.
With a continuing upset in the markets due to the pandemic and Brexit, how do you see this impacting funding or product availability in the specialist lending market this year? Jane first, please.
I guess the jury's still out a little bit as to what's going to happen. I think our main concern at the moment, a bit like Liz, we've got a lot of purchases still in the pipeline. So our main concern is getting those through. And obviously there's a meeting on the 1st, I think that's Monday, about the possible extension of that stamp duty. So, you know, that would be brilliant if we could do that to get those purchases that we've already got over the line and possibly some more coming through. We're still getting lots of inquiries, although the deadline is very close. I guess we might see expats having some more restriction, but again, we don't know what that's going to look like yet. Funding wise, I think there's been some positive signs. There's been a couple of lenders that have done recent securitizations. I think TML and Pepper have done a securitization in this last week. And Lambay have got another funder as well. So I think that's all positive signs. So I guess we just need to wait it out and see.
Thank you. Lucy?
I think there's actually a lot of liquidity in the market at the moment. And I have to say, it's not something that I've been concerned about, not since there was a period after we went into that first lockdown where you just thought anything is possible. And there was that fear, are we going to return to financial crisis type world where everyone's funding's pooled? But there seems to be a lot of liquidity out there, and there doesn't seem to be a retrenching from the capital markets or anything. So I think I feel quite positive about funding. I don't see liquidity being an issue over 12 months, but who knows? A lot can happen in a short space of time, which is something we've all learned over the last 12 months.
Great to have some positivity though. Thank you. And Liz.
Yeah, I agree. I think funding has settled very much like Lucy. I was quite concerned at the first lockdown on how the funding would go, because that was the biggest problem during the sort of credit crash. And it hasn't really panned out. We have had problems with some lenders with funding, but it's good to see, the lenders like Together and Vida that had some of the biggest problems in the specialist market, they're now fully back in the market, and there hasn't been that many other sort of casualties, so that's good news. I think it's quite interesting to see what else is happening in the market. Obviously, before this, you've got one savings bank who, had come together with Precise Mortgages, and now you've got Shawbrook sort of taking over the sort of larger share of the mortgage lenders. So it'll be interesting to see what other sort of consolidations come off the back of this as well. And I think that's maybe an area to kind of look at going forward too.
Interesting. We'll be watching this space. I will just make a reference there to the stamp duty holiday for our delegates watching this. We're actually filming on the 29th of January, so we're not sure yet about the extension. We'll know all about it by the time you're watching. Moving on then. How has technology benefited the specialist sector over the course of the past year? And how much of that has been industry or sector specific, and how much has been broader technology in general? Lucy, that's to you first, please.
I suppose stating the obvious, the broader technology change has been a complete revolution, and I think it will reshape the way that we work moving forward. I can't imagine a return to using face-to-face meetings where something can quickly be done over Zoom. I think face-to-face will always have its place, and I think that will obviously return as and when restrictions are lifted. But the ability to just plug in and work from home, I think, shocked everybody how easily we could do it. I think if you would have asked us before, we'd have said, oh no, that would take forever to implement. But it's amazing how we respond when given no choice. And I think actually that's one of the positive things to come out of it. We'll all save a lot of time traveling. Connectivity is amazing. Zoom, we actually use Microsoft Teams, which we actually use when we're in and not in the office. And it's great for collaborating with colleagues, and it's just a quick way of working. So I think there's been some real positive changes if you look at it from a wider perspective. Industry-wise, I mean, we're always chipping away at it, but there's nothing, in my opinion, that's particularly revolutionary. I think we are, we've seen some good launches on certain systems from lenders, but nothing which I think is a game changer at this point. And I think as an industry, we've always been a little bit behind on technology. I think there's always more that we can do. So it'd be interesting to see how that continues to evolve over the coming years. Thank you. And Liz, what's your view?
Just picking up on Lucy's point with lenders and technology, we have seen some movements, lenders accepting sort of electronic IDs and things like that. But we've had open banking for quite some time now, way before this the COVID happened, and there's very little adoption of that kind of technology. Some of the lenders really have taken on board this as an opportunity to kind of improve their processes, and I hope that more and more lenders will do so. But for example, in the first lockdown, some lenders adopted AVM's desktop surveys, but in their credit policy, it was just for the period of lockdown, and then to return to normal afterwards. Well, if you can do it during the period of lockdown, why can't you do it forever? And there are other lenders that are doing it continuously. I mean, we've just had a residential mortgage with HSBC agreed 85% purchase on an AVM. I mean, there's no reason why other lenders can't adopt that same kind of technology. So I think it would be great to see more of that from a lender perspective, but also it's got to be joined up from, you know, once you get to the mortgage offer, you know, then the solicitors take over. And that's where we've got a real backlog and problem at the moment, and where technology could really help. I know, again, some bridge lenders, you know, have made concessions where they don't require a person to actually sit in front of the solicitor now to sign. They're using technology to enable sort of remote signing where they didn't before. So it's more of that I would really like to see, because that is the only way our industry can move forward and cope with these kind of time delays that we've got right across the process.
Thank you. And Jane?
Nothing much to add, really. I completely agree with everything that Liz and Lucy have said there. I think that everything that's happened in the last year has forced us to work differently, has forced us to launch, I mean, even ourselves in TBMC, we've launched our document upload system and electronic ID this year, which were in the pipeline, but there was no way we thought we would launch them in 2020. But, you know, we pushed forward and did it. So I think it has revolutionized, and is probably the one good thing to come out of it. And just kind of just repeating what Liz said, the offer to completion and conveyancing is, I think, really where we could do with there being some more innovation, because that's where everything just seems to really slow down. And particularly, you know, having been trying to push through all these purchases to meet the stamp duty, that really does show how slow that part of the sector can be. So that would be great if we could see some more innovation there.
Thank you. Now, what trends have your businesses seen in specialist buy-to-let in the last year? Are they set to continue? And how can brokers ensure they're best placed to cater for landlords? And that one to Jane first, please.
Yeah, so I think touching on limited company first, I think that is something that we have seen massive growth. There was Hampton's estimated about half of buy-to-lets were now being done in a limited company, as opposed to in 2016, I think it was 1 in 5. So we've seen huge growth, and I think that will continue. We're continuing to see a lot of inquiries coming through, and landlords still looking at their tax and seeing, you know, what's the best route for them, and not just new purchases, but reconstructing of portfolios as well. So a lot of quite complicated deals where landlords are looking to take properties out of personal name, put them into limited company, and coming up with all weird and wonderful ways that they think they can make that the most cost effective. So I think brokers probably need to get a bit queued up on that side of things, limited company lending, what's out there, and how you can transfer properties, purchase into a limited company, things like that kind of knowledge, because there's lots of inquiries coming through there. Just complex buy-to-let in general, I think, as well. Landlords looking for properties that have got higher yields, so lots of HMOs, multi-unit blocks. There isn't a day that goes by where some sort of property comes through that, you know, is unusual to us or something we haven't seen before. So I think just getting to know the lenders that are in that space and what they can do, making sure you've got good contacts where you know who to call if you do have something unusual coming through, and just kind of getting as much knowledge as you can in that more complex sector for me.
Thank you. And Liz, do you have anything to add to that? Pretty comprehensive answer.
Yeah, I would reiterate the knowledge piece. I think it's really, really important for advisors to invest time to understand, firstly, the variety of terminology in the buy-to-let market, the differences between buy-to-let mortgages and residential mortgages, and to the structuring side of things, like Jane said, in terms of kind of limited company structures, but also things like title splitting, and variety, you know, HMOs, NUBs, how they all work. Because if you're going to be actively involved in working with landlords, you need to have that depth of knowledge in that specialist area. What surprised me is we run Academy for new advisors coming on board, and we do quite an in-depth training on a lot of these areas. We've recently opened it up to experienced advisors within our network to come and join us on that training. And what surprised me is these experienced advisors, even with a couple of years worth of experience in the industry, there was still quite a large knowledge gap in some of these specialist areas. And so I think if you want to be advising in this market, you've got to invest in that knowledge. And then again, to second what Jane said, then you start to invest in understanding who the different providers are out there. And you've got your high street kind of mainstream vanilla style lending. Then you've got your specialists like your Precises and your Vidas and your Kensingtons and your Kent Reliances and so on. But then you've got another whole bank of specialists that starts to dip into the commercial market. So you kind of need to get a bit of knowledge of those as well. You know, what about if you come across a semi-commercial? What about if you come across 20 flats on one freehold? You start to dip into the commercial lending market there in some ways. So it's investing the time to bring your knowledge up in those areas, which I think is really key for advisors who want to be in this market.
Thank you, Liz. And Lucy, anything to add to that?
Yeah, so picking up on that HMO trend, I think that's something that we've seen continue to grow, and actually more properties are pushed into the HMO category by virtue of the fact that they'll be either in an Article 4 or they've got 3 tenants in there, or previously the barriers were there and now they've come down to there. So we are seeing a lot more fall into that category. So you have, in some cases, the unintended HMO landlord who can't quite get their grip on the difference between pricing with a normal buy-to-let mortgage versus a HMO mortgage. So there's a bit of wrangling over pricing and bringing landlords' expectations to where the market is. And then we're also seeing quite a lot of landlords that want to add value or convert something into a HMO. So they're not just looking only for the higher yields, but they're looking to increase the capital value. So there's a bit of a refurb buy-to-let angle with a lot of the landlords that we're seeing at the moment. We also deal with a lot of expats, which is something that I've always thought is quite underserved in the market. Although lenders have products, it's often very restricted. There's quite a lot of barriers with some lenders as well, with minimum incomes and who the applicant works for, etc. So I think you could probably do with a bit more product availability in the expat space, but it's something that we've been busier and busier with. And Liz also touched, I think, on the holiday let, or was it Jane earlier? We are seeing so much holiday let business come through, which is much harder to place at the moment for obvious reasons. But I think that that's a trend that's likely set to continue, especially given the travel restrictions that were recently brought in with a 10-day quarantine for high-risk countries. Yeah, I think people will be reluctant to book foreign holidays with that uncertainty, because even if something isn't classified as a high-risk country, it could quite well become a high-risk country. And in my personal experience last year, when we went to book a UK holiday at reasonably short notice, but within a couple of months, you just couldn't get anywhere. So I think when that opens back up and the restrictions are lifted, it's going to be likely that that's where everyone's going to rush before risking booking a foreign holiday. So I think that demand for landlords to be able to finance those properties will continue to increase.
Now we come to our final question. Can I ask you all to answer this one pretty concisely if you can? What one piece of advice would you give our delegates for improving their advisor business in 2021? Jane first, please.
5-year fixed redemptions. So the initial 2016 5-year fixes will be coming up to redeem this year. So make sure that you're on top of those.
Thank you. And Lucy?
I suppose in a fairly generic way, it's just making sure that you don't take criteria for granted. There's a lot of complication in the residential space at the moment with furlough income, people returning from furlough, higher loan to value products being withdrawn, etc. So I think where you think you know a lender's criteria really well, you have to be very careful that you don't get caught out, because sometimes what's published or what you believe to be true can change very quickly. So it's really vital that you're absolutely keeping on top of all of the changes and phoning, double checking and making sure that what you're being told is right.
Brilliant, thank you. And last word goes to Liz.
I would say client relationships, valuing those and spending time, investing time in getting to know and understand your client, building touch points so you can keep in touch with them rather than once every 5 years, perhaps do their property insurance so you're speaking to them every year, and so that you're understanding some of the things that they're going through at the moment, and you are the first point of contact that they'll call when they need something in this market. Build your client relationships.
That's it from us and our panel. Thank you very much to all of our panelists. Thank you, delegates, for watching, and goodbye.